Hi everyone, hope you're doing very well. Just want to have quick 3 comments on the JCI collapse, the panic of the last few weeks. The first one is about the averages. We know that markets go up over time. I don't know whether you know this, but day to day, if you look at the average up versus down over the long term, this works all over the world, is slightly more than 50%. So you get more better days than bad days. So what I did was I took 10 years of data daily, 12 years, sorry, back to 2007, and gave a score of +1 for an up day, -1 for a down day. And over the whole 12 years, the score ends up at 300. So you get this accumulation of positivity over time, which is how you generate the wealth through the stock market. And that's an average of about 25, +25 every year. Of course, averages don't mean anything, but if you take each year separately and go back to 0 on January the 1st, it works out pretty well. There's a range, quite a wide range, from +3 to +43, but mostly they're around 25 to 30. So the average works quite well. And there's no negative. +3 is 2008. That's the worst one. But even 2008 ended up with a plus. In 2018, we are now in May, and we are, as of Friday, at -6. Now it does go minus during the years historically, but it always ends up plus. So the worst ever, it's much more plus than minus, the worst ever, because the weight of the positive days always keeps bringing it up. The worst ever in 2008 was -8, so we're pretty close to that level. So I reckon that's a pretty good buy signal. And then secondly, people say that the market's weak because of the currency, maybe. Yes, the rupiah has been weak against the dollar, although as mentioned in the past, if people are worried about rising interest rates, the dollar has an inverse relationship with rising interest rates. So if interest rates are going up, the dollar should go down. So that strength of the dollar shouldn't last. Excuse me. But even though the rupiah has been weak against the dollar, it has been strong against others, like the pound. I have to pay school fees in pounds, and a few weeks ago we were above 20,000. That was pretty painful, with the spread almost 20,500, and now it's at 18,900, so I'm quite happy. And then lastly, I've been keeping this economic index. It's just a simple plus-minus index of about 7 economic and financial indicators. And it shows you how stocks tend to lag. So the index has been rising. It rose very strongly second half of last year, and then it came down into the beginning of this year. But it started to pick up again in March, the latest data. The stock market seems to be running about 2 to 3 months behind that. So while the index came down at the end of last year, the stock market has now come down a bit. But as the economic index has risen, stocks are quite far below that level at the moment and should rebound. So that's my 3 pointers for the week market. See you all next week. Bye.